Good day, everyone. Well, we see that the markets have shown some levels of temerity ahead of the Fed meeting today. The final prognosis on whether they're going to raise rates or not. The futures odds, CME futures, are putting odds at 23%. And yeah, that's no surprise. I mean, Yellen's a dove, and she doesn't want to rock the boat prematurely, so I wouldn't be surprised to see the Fed just take a pass this time around and just kick the can down the road further on when they will raise rates. But that said, the big concern really is the global economy, which is been slowing down, and China, the world's second largest economy, certainly is lagging, and therefore Yellen is most likely to err on the side of caution and not hike rates, even though these economic reports at home seem to indicate that there's room to hike 25 basis points. And as I've talked about in prior reports, should the Fed raise rates, say within the next 3 meetings, it doesn't mean that's the beginning of an endless procession of rate hikes. It could be that we just have one rate hike and then a lot of easing that follows. I think it'll depend on how markets react to that first hike. The Fed is, of course, prepared to create other forms of QE should the markets get rattled and start to really suffer a steeper correction than they warrant, or that they would want to see. Therefore, I think that they're controlling the situation through QE, and of course, at the moment there is no QE except in the form of interest, which I think is about $5 billion a month, something like that. But the other world banks, of course, are printing like there's no tomorrow, and there's indications that China and the ECB over in Europe, these are going to continue to ease and perhaps step up the pace of easing because their economies are, I guess, getting dangerously close to recessionary levels. So to avoid that, they're going to do this money printing dance, and we'll see what comes of it. As far as whatever the Fed does today, I think it's kind of probably a non-event. I mean, they're going to try to be as gentle as they can with their wording, reminding the markets that they are going to raise at some point in the near future. But again, it's predicated on the global economy, and these markets, where they're at right now, they could retest lows, but they could just as easily start to baby step higher or move higher as they have in the past in this easy money environment. So it's, as far as at this juncture, it's probably better to, as far as market timing is concerned, sometimes the sidelines are the best place to be, especially if it's almost like playing the lottery, and you're flipping a coin. It's better to be on the sidelines. But on the other hand, stocks have many times this year, and once again, have provided ample opportunity on the buy or the short side. Lately, since late last week, some stocks have started to set up, and as you will note, we've sent out some reports on actionable names that have had pocket pivots. And so there is some opportunity that's presented on the long side right now, and of course that could change on the dime. But right now it is looking like there is some quick profit opportunity. As we've said, if you buy into something and it gives you some profit in a shaky environment, you should take that profit, not wait around, because that profit, especially in this very choppy sideways market we've experienced this year, that profit could vanish in a heartbeat, in a day, half a day even. So again, if you have profits in a stock where the stock looks like it's getting ahead of itself in terms of its overall pattern, don't be greedy and take at least partial profits off the table. Now, as far as commodities, well, we know that the global situation is showing, it's not showing signs of turning around, and commodities reflect that. I've talked about the Commodity Research Bureau, and then you can look at gold, you can look at oil, you can look at silver, and these are all just seemingly in a long-term downtrend that doesn't look like it's going to necessarily reverse. At least there's no signs of imminent reversal going on yet. So I think it's just best to sit tight as far as timing the markets. The shorter term
Well, it looks like Dr. K fell off the map there. Might have lost his internet service. In any case, I'll pick up the ball here. Oh, there you are.
3 hours away.
Dr. K, we missed, you dropped out for a little bit. So,
oh, I did?
Yeah,
Okay.
I'm going to say for like about 20 seconds, maybe 15, 20 seconds. So if you can back up there, that would be fine.
Yeah, sure. No, I just was saying that, did you get the part about the volatility model?
No.
Okay, well, that was the last thing I said was that's a short-term indicator, and that's not going to remain in cash for very long based on its history. Yeah, that basically I was going to hand it over to you. So that last 20 seconds was not that timely. So go ahead, take it from here.
Okay. My general view here is that everybody's waiting on the Fed, and my view is I'm not waiting on the Fed. I'm just doing what I see. My new and favorite phrase now is I prefer to invest on the basis of what is rather than what ifs. And I think if you get bogged down in too much of that, you might miss what's going on in front of your face. But I think the bottom line here in terms of the macro situation is that we had the massive breakdown. So if you're getting short this market, you're doing it in here, and that's I think when I was first starting to talk about it, as I have repeated for the last couple of webinars. And when you got this break, that's where you're covering into at some point. I mean, I covered a lot here, and I was able to get a little more juice out of it shorting into this day here. But after that, it's pretty much done. And the other big sign from my perspective is that I'll start to get emails in here, and everybody wants to get short, and you get this sort of like trash talk about stocks, you know, that they're heading lower and suckers are buying and blah blah blah. But the bottom line is, you know, forget the BS. If you're trying to short now and you miss this, guess what? You're late, and so you're gonna have to sit around and wait till some of this washout kind of works its way out of the system, because basically anybody who's going to sell sold. And remember that IBD went to a marketing correction right here, and they're really good at that, calling the low. So if you sold on the basis of their marketing correction call, you sold at the lows, and they probably took your stock right here. But in any case, if you're shorting, that would have been your last day to cover, okay? And there's been some tactical opportunities on the short side here, but as we've been discussing in recent webinars, it's not a lot to get excited about or to expect a huge amount unless you think we're going to blow apart right away. And if we go back to that May 2010 environment, things are a little bit different now. So I'm not so sure that it's exactly the same. It's more like what I was talking about last week, where it might be like 2007, where we, let's see if we can get there. I should probably be using my HGS Investor to look at this. But in any case, if you guys recall when we were talking about that last week, and my whole thesis on the long side is that we could certainly top. So, you know, this is where the market topped October of 2007, and it broke down and it chopped sideways. And it seems to me like, you know, we had more of a breakdown. So this whole move happened a lot faster, and now you're doing this chop up into a moving average. Now we're almost into the 200-day moving average, and you're in this sort of ascending wedge kind of formation. And I know this is kind of like technical analysis 101, where if it breaks through the lows of the ascending wedge, come back here, there we go, you can draw lines across the tops here and along the lows, and you get this sort of rising wedging pattern. So if it breaks through the lows of that on heavy volume, that would be bearish. But my guess is that the market may not really care what the Fed does here. And I think you just have to focus on the individual stocks. You can see that the Nasdaq's coming up to its 200-day. It could easily go through it. and this might coincide with the S&P moving further up towards its 50-day moving average. So I don't think that there is any clear-cut message necessarily from the indexes right now, other than the fact that we had this washout, and then you combine this with what I was seeing last week, for those of you who remember, in stocks like, for example, Under Armour. These things had a break, and then they run back up above the 50-day. So here's the classic 50-day moving average violation boomerang pattern, where it violates the 50-day here, but that's the low. And that's kind of how this market works. You know, all the old rules are kind of out the window, so you start thinking that it's violated the 50-day and you need to sell it. Well, you're selling the lows. And now the thing rallies back above the 50-day and the 10-day and the 20-day, and it's moving along and volume's drying up. And that's where you can buy it, and then it runs up for 3 days sharply. Speaking for myself, I would sell into this move looking for a little pullback, maybe towards 101, 100, somewhere to buy into. I definitely would not be chasing this. And also, if you recall, last week I bought Tesla during the webinar, and I told you all I think I was in at about 245 something, I forget. And the stocks moved higher, but again, it's the same situation where you break down through the 200-day. In this case, you've already violated the 50-day, and you break down through the 200-day and you come back up and rally, but you bounce into the 50-day a couple times, which these create tactical short sale opportunities where you're going to scalp it for a few bucks, you know, nothing major. And I wouldn't expect that it, you know, unless you see it breaking down. I'm usually trying to scalp these rather than thinking I'm going to get another gold mine like I did on the last break. Remember, Cinderella doesn't usually come twice, and if she does, it takes a little time for Prince Charming to find her again. But she can show up again because she does have one of their shoes, I've pointed out before in my, I think, very accurate analogy. But now you see Tesla volume picks up. This missed a pocket pivot by 1 day, but it is a 5-day pocket pivot. To me, that can be valid in this type of pattern. But again, I'm more interested in the break and then the pullback on lighter volume, and then another pullback in here to the 10-day on even lighter volume. So to me, this is a Wyckoffyan retest. And you know, a lot of people want to get into the precise definition, and they want parameters to plug into their mindless equations, so that it'll spit out an answer that says, this is a Wyckoffyan retest, clear to buy, or something like that. But you have to use your judgment and creativity, you know. And I think, as I was pointing out to someone else earlier today, that's our one advantage over machines, is that humans can implement creativity, and I don't think machines can. And so you really have to think about what you're doing in this market and move away from the obvious. And obviously, we've talked about this many times, you don't want to be buying into strength, you want to be buying into constructive weakness or tight action. So I'm not interested necessarily in buying any of these stocks now. Another one that we talked about last week, and this is a little better because it was a pocket pivot, but you could see it doing the same thing, the break to the downside, the retest on lighter volume, and now it sets up and it comes out on a pocket pivot, and it's moving slightly above the 50-day moving average. But I felt this was viable last week. I think that would have been this day here, on the basis of the tight action and the volume drying up. So those are the types of setups I'm looking for, and there's a couple other types of setups I'm looking for also, and that is the pod long theory, or basically the idea that something that's a hot stock, it has a big move, so like Fitbit, hot stock, hot IPO, has a massive run up and then an equally rapid breakdown, and then it can come up the other side and form in this case would be an IPO punch bowl of death, or a pod short sale situation. So we can look at, so for example, we talked about Mobileye as a short previously, but again, here's the concept: hot IPO, breakdown, and then rallies back up the other side. Now it becomes shortable here, but recall that we were playing this rally on the upside. So the pod long theory, you can look around and look at stocks that were hot, and might tell you that Fitbit is going to have another rally back up to the highs. And it got started yesterday with a pocket pivot off of the 10-day and coming up through the 20-day. So it's a deep bottom fishing pocket pivot. I kind of liked it more on the Wyckoffyan retest here, pulling back, and in here especially on the light volume. So I was actually buying it in here. and now it's jacked pretty nicely for me, and I'm selling some into this, but it probably will try and hold a core position. It could back down. This morning it touched the 20-day, so you could have loaded it up, and now it runs up and you sell into that. There's some resistance around the 40 level, but it might get as high as a 50 or just above it, and then maybe try to consolidate under this overhead. But I think this has a reasonable chance of going higher, and maybe a lot faster than a lot of people think, based on the pod long theory, which is essentially looking at a pod, which is a shortable pattern, but understanding how a pod evolves helps you to use some creativity and extrapolate a potential long play coming up the right side of the pod, okay? Now, I would also caution people against getting all excited about this, and now all of a sudden people will see everything is a pod long theory play, so they want to, you know, start looking at things like Etsy, which I'm not so sure. Maybe this was the pod. This is a little bit, I don't know. Maybe it's a big ugly double bottom. Shop has already had the breakdown and then the run up again, so it's already had a pod. Now here it comes again. This thing's running up $5 today. It's up 18%. So it is moving, and you see that there. So you are getting a sort of a pocket, bottom fishing pocket pivot on big volume coming up through the 50-day. So that's another one. Maybe it forms a double pod, and that can happen too. So you could, using creativity in your assessment here, you could play this, or you could have bought this action in here, or even caught it early this morning at the 50-day, and on the premise that maybe it makes a double pod. So somebody says, so much for the so-called bear flag pennant label everybody wanted to slap onto the indexes a week ago. Well, it was a little bit of it was a bear flag, and actually it could still be construed as one. But I think that trying to slap labels on things isn't really going to make you any money one way or another. So I think the bottom line is just watching what the stocks do, and that tells you everything you need to know. So once I know that we've reached a potential low, and instead of breaking down, I'm seeing names dropping off of my short sale watch list, like, you know, names like Avago, which is moved above all the moving averages. And I'm looking at some of these other ones. These could morph into long situations, like Skyworks Solutions. Notice how, again, you have the breakdown and you pulled in on lighter volume, so that's the retest, the Wyckofian sort of retest, and now it's setting up along the 200-day and the 50-day moving averages as volume is drying up. So this may turn back to the upside. Now, you can also see here, it looks like a big head and shoulders, so this could just be a trade up to the right, the peak of a right shoulder, maybe up to 100. Or it could be the start of a new base. You have no idea of knowing. All you can do is look and see what it's doing in real time and play it that way. So I'm seeing a lot of this sort of action, and it's all over the place. I'll give you here's another potential pod long theory. And also I would point out that these don't have to work right away. I know Fitbit is nice because I bought that one on Monday, and it's jacking, 4 days later. It's a nice and happy move. But same thing, hot IPO, now you break down, now you're trying to set up along the moving average confluence here. Volume is light in here, and you've had a couple of pocket pivots here, this one coming off the 10-day, 20-day, this one coming up through the 50-day, and it doesn't necessarily have to hold the 50-day in my view. If it holds tight along all these moving averages and the volume dries up, then that could be setting up more upside. And this was a hot IPO. And then some people want to point out that I guess they have a IPO lockup expiration on the 22nd of September, which is in a few days, I guess next Tuesday. I wouldn't get too bogged down on that. Again, that's a what if type of thing. I'm more interested in what is. And if we think back to something like CyberArk, they had a share lockup on March 23rd, which would have been, I think that was the excuse for this sell-off, which would have been right here. So right here, and the stock pulled back a little bit, but then it just continued higher from there and eventually went up above the 70 level. So, to me, that's all just stuff you can fixate on, and diddle yourself with, thinking that you have to worry about. I would just base things on what the stocks are doing. So this is setting up, the sedge may be setting up and it may take some time. I don't know, but that's the sort of thing I'm going to look for to buy. So another one, look at something, say like a cyber, and I think you have to, again, use some creativity. We know if you study leading stocks, we know that they will frequently pull back. They'll have corrections and they'll pull back all the way to the top of a prior base, and they start to look pretty ugly, and that's what you have here. Now, is this a big top, and is it just going to nothing? I don't know. It's a possibility, but what I know right now is that you pulled to the top of this structure, and the volume is sort of drying up in here. Well, it is drying up, and you didn't have a lot of selling here on this week, and if you look at this, that's not all that heavy. You're pulling in, now you're retesting, so this could be in a position to turn, and I'm looking at some other ones. Like FireEye has done a similar sort of thing. It's pulled all the way back to the top of this structure here, and your volume is drying up, so you're getting this Wyckofian retest. And I'm not sure about the exact terminology, but I believe when you get this low, it's a sort of a spring, is what Wyckoff would call it, and then you get this flat pattern. That's a springboard, I believe. But you know, you could just call it call it whatever you want. Call it a Gilmonian low or whatever. So, but that's something that I've noticed about stocks in my observations, and then when I read up on Wyckoff, realized that he had already seen something like this, and so in that sense, my work wasn't really derived from Wyckoff, but I found that it dovetailed to some extent with what he was seeing a century ago. So, anyways. Planet Fitness, I think we talked about this last week, but notice how you got a, somebody's texting me. Somebody, an old institutional salesperson from O'Neill, telling me about VA, which I'll get to in a second. I notice all the airlines are looking pretty good here. But here's a pocket pivot. You can't, let's see, I got to kind of move this out of the way. There, you can see it now. Yesterday, you had a pocket pivot right here along the 20-day. So this has been setting up. It's an IPO. Maybe Planet Fitness is moving because of Fitbit moving. I don't know. People looking around for stuff with fit in it, and maybe that fits the bill. I mean, gyms, you know, where you go work out. In fact, Dr. K, your dad had a good experience at the gym. He threw his back out, as you know. I guess you got to start slow. But in any case, gyms seem kind of boring, but if it's a steady 20% business, it's really a value proposition when you think about it. A company that can achieve scales of efficiency and lower margins as a result of those scales of efficiency. And they're offering, you know, something that's pretty similar across any gym. You go to any gyms, more or less the same, at least from what I can tell, but I can't call myself a gym aficionado. I think that a 20% steady growth could attract institutional money, and it's moving higher. So that's me. Somebody says, great call for now. Well, it's working. That's all we know, Sam. Let's see. And then I noticed Virgin America jacking to the upside. And look at this. Here's a hot IPO. And what do we notice? The pod. Here comes the pod. But I think you had to buy this maybe lower in the pattern. I probably should have been on this a little earlier, but you know, this was where we had the breakdown in the market. It was turning before the market broke down, and then it had a pullback when the market broke. And so within that context, this looks normal. But notice how this is forming a pod. And if you look around at all the airlines, this is trying to come back. You have, whoops. What's this going? Cancel. Delta is hanging in there. We know that JetBlue has been moving higher, and it's looked pretty good. And it, you know, had a shakeout, and it's continuing to move higher. So the airlines are looking okay. And then to me, that seems to argue for at least some strength here in the overall market that is not necessarily apparent based on what the indexes are, which look a little bit suspicious. So, you know, maybe we find out today when the Fed comes out there's something. I bet you they surprise everybody and raise interest rates. I don't know why. I think everybody on the planet is convinced that they're not going to do anything. But I think that the trajectory, as Janet Yellen has consistently discussed, is more important. And so while they might raise, they're still going to take it slow. And if you get the one raise out of the way, that could send the market higher. So I'm not, and I would just base it on what I'm seeing in individual stocks. They look like they want to go higher. So my conclusion is that the odds are that the market's going higher one way or another. And I guess we'll see how that pans out with respect to what the Fed does, assuming that matters, or as Dr. K says, it's more of a non-event. So that might be the case too. Somebody's asking, what's your opinion on Priceline? I think the question, what's your opinion on any stock, is kind of dumb, because it's not a matter of having an opinion. It's a matter of evaluating something based on the objective price volume action. So what you can see here quite clearly is you had a gap here, and that didn't qualify as a pocket pivot. This could be considered a pocket pivot breakout from a miniature cup and handle. This was looking to me like a short earlier, and you can see how you had this left shoulder head and a right shoulder. Now it's totally cleared out of there, and now it looks like it's trying to turn. It's a very choppy pattern. It could fail, but it's hanging in there, and I think that, combined with the action you're seeing in Amazon, which is very tight in here, and also Google, which is holding up in here very tight, and you look at Apple, which is holding along this level here very tightly underneath the 50-day, and this could be setting up a pocket pivot move above the 50-day moving average. Notice how it's looking very tight in here. Facebook, same thing. So when you put all this together, it looks constructive. So I would be leaning towards the long side here, and we'll see if the volatility today creates any entry opportunities for those who are staying awake and aren't afraid to take shots. And that's basically where you're at, I think, in terms of the individual stocks. You're just looking at the setups and buying them on that basis. If you see it, not being afraid of the Fed meeting or the Fed announcement, whatever. I think the idea also that the Fed announcement is going to be like a whistle that blows and says it's all clear now to buy or to short is kind of dumb too. So somebody's asking, I got on late. Do you have any thoughts on JD or BABA? Do I have any thoughts on it? I don't know. It looks like a piece of crap. So BABA looks like it too. So why would I have any thoughts here? There's really nothing to think. There's no action that would tell me you're at a low, I don't think. Not even any real white copy and retest, because notice how you come down here and the volume picks up on the sell side. So nothing to do there. Somebody says we lost you at the 821 mark. Is that true, Dr. K?
The 821?
Somebody says they lost me at the 821 mark. I think it's your internet service.
Yeah. Okay, out here.
Tomorrow. Facebook looks like it's wedging. Well, it is wedging, but it's holding tight along here. My view is if it pulled back a little bit and held tight, that would be a viable situation. So I don't really see, that is necessarily a problem. If it broke down through the 50-day and you saw selling volume pick up, that could be an issue. So I would be attuned to that. Some other names that are looking pretty good. Skechers hanging tight, so that's looking pretty good. LCI is kind of a roundabout, and I don't know, it's a kind of a weird looking double bottom, but this stock does tend to be volatile. And here we come again. You're back above the 50-day and 200-day and holding tight on volume. So you're seeing a lot of this sort of action all over the place. Let's see, what else? Oh, Paycom. And here's a good example of why you don't buy strength. If you're going to buy this thing, you should have bought it like UA. Buy it when it's tight along the moving averages. And then you're on it when it does this. Now they come out with a 4.5 million share secondary offering. Everybody runs for cover. My guess is they priced it in here, and if you buy it, you could maybe buy some in here, and if they price it in here, I think it's going to turn higher. So it gives you a possible re-entry point or an entry point if you miss this move the first time around. But this is one of your stronger acting stocks, and I'm not sure. I noticed Global Payments is another one that looks pretty good, hanging in there. EPAM Systems doing the same thing. I'm not sure if you got any pocket pivots in here. Maybe you do. Maybe right here. Yeah, that looks like one. And so these are all looking like they're setting up. So my conclusion is that the market looks like it wants to go higher on that basis. And the fact that I'm up on a number of long positions that I've taken over the last several days also tells me that things are more constructive than not constructive. So that's basically what I uh, use to determine what I'm going to do in the market. I don't get bogged down necessarily in what the indexes are doing, although I will say that this whole theme of the washout selling has been part of the long thesis here, and I think at the very least it sets up a tradable move, which it has so far, but we'll see what happens here today. So if we run into the 200-day in reverse, that could be an issue for the market, but so far I'd have to say individual stocks are looking okay, and the situation seems to be improving. So anyways, any more questions here? I don't really have a lot to say here. There's a few setups I'm looking at. I wouldn't get bogged down in showing you 30 or 40 stocks, but I'm showing you some of the key ones that I'm watching here and that I think have some upside potential. If the market keeps going, I think that's where you want to go. So either if you remember what I'm talking about here, or you review the video after we post it later. I think that would be a smart thing to do. Hopefully we can have it up before the Fed announcement. But I would mostly look at the Fed announcement as potentially creating volatility that I can capitalize on one way or another. So I would keep a lot of dry powder, and I do have a fair amount of dry powder right now. So somebody says, we missed a few seconds at the start when silver was just ending. Can you please rerun that? Not sure what I'm supposed to rerun since I can't rewind anything. But I think Dr. K was just talking about how commodities have been in a downtrend. So you're seeing a pocket pivot move today in the SLV. I don't know. I guess it's assuming that the Fed isn't going to do anything. And gold, same thing. But, you know, these have not been any kind of a trend to play on the upside, so I'm not really interested in that. Zyop, somebody says potential double bottom. Not really a double bottom. Here's a base, and it failed on the base, and I wouldn't call this really a double bottom at all. So it's more just like a failed base, but it's trying to recover. But you know, I wouldn't get bogged down in trying to label it this, that, or the other thing. I think that's a mistake that a lot of investors do, and I know IBD has brainwashed everybody into this idea of you know, slap a label on something, directions like, you know, place shoelace A over shoelace B, or fit peg A into hole B, all that kind of baloney, and I don't really operate on that basis. What I would say here is this thing is trying to turn, but it's definitely not a double bottom, but it doesn't mean someone couldn't try to buy it, say here, as it's having a pocket pivot coming up and off of the 10-day line here. You notice that? So there is a little bit of a roundabout flavor. But again, this is what you're seeing in a lot of stocks. So it gives me some clue that we could be in an okay place in terms of potential further upside. But we'll see how things play out. So I keep very tight stops. If I get a situation like a FIT, for example, which I bought a few days ago, I've cut my position in here as a rally up in the 40 by 2/3, so I cut it down and I'm hanging loose and see if I want to come back into it. This morning I gave you an opportunity to load up actually, and I was actually buying it at I think 36.10 this morning, and there was somebody offering like 6,700 shares, so I just said thank you, I'll take it, and the thing runs up. So now I would be selling into that because you've got about, I don't know, 15% in the thing in couple of days, and that's the kind of move I would sell into. But I'm fluid with the position, so I'm working at looking for a spot to come back in, and right now it's sitting below where I sold it, so I do have the option of taking back some shares, and I'm sitting with a one-third of my initial position, which would be a core that I'll work until further notice. Let's see. Somebody said, I think we missed a bit about volatility just after silver. Oh, that was Dr. K that fell out, dropped out. Nothing really. He didn't have anything major to say. I mean, the model is on a neutral signal, so there. CHRW, what is this? Oh, it looks like it's wedging up. Well, yeah, it is, but I wouldn't say it's necessarily something you're going to short. So you see, everybody's seeing all of this. I don't know. I just think that when everybody sees everything as a short, they're probably going to be wrong, and that's been the case. Agreed about IDB. I think, is that IBD, Gar? Still having a hard time breaking the habit. I did not renew Marcus Smith. Run. I saw this one. Isn't this Sunrun? Yeah, this is an interesting name. It's kind of thin though, so I'm not sure, but it looks kind of interesting. And I think the company does. I was looking at this. Let me take a look at it. It's in the solar group, obviously. Residential. So another residential solar outfit, losing a lot of money. So I think I like. I think if you see these names come back. So if you see SunPower come back, and if you see First Solar come back, and if you see the Run do well, then I think Sedge, Solar Edge can come back as well. So, and that to me is a real moneymaker right there. That they have great earnings growth and look pretty good. So somebody says, oh, Gar, that was dyslexia. Yeah, I know how that goes. So far, seems like the follow-through day was a decent follow-through day. Well, the follow-through day, in my view, was not that actionable because there was nothing to buy. So, and so that's what I refer to as a follow-through day with a PH instead of an F, because there's nothing in position to buy on that day. Now, the next few days, we saw things start to develop. So I think the stupid thing is to get caught up in whether it's a follow-through day or not. So again, you're looking for somebody to blow the whistle and tell you, yes, you can now start buying stocks like some mindless moron, when you really need to be paying attention to what the actual stocks are doing. When I start to see the action in the stocks, that's what I move on. I don't sit there and say, oh, IBD says the market in uptrend now, and I'm just going to start buying everything in sight. I think that's for amateurish investors who really
Also, keep in mind that
most
when we've had
fail.
corrections, like in 2011, IBD had 3 follow-through days following that steep correction that were all false signals, only to see the market retest lows. So, you know, the follow-through day concept is something that I've utilized to a great degree prior to QE, prior to 2009. When there was more statistical significance behind it, of course, in context with charts. You just can't go and blindly, you know, assign a follow-through days because the index are saying so. But especially in this QE environment, follow-throughs just have a very poor track record. So you really got to use a lot more metal in terms of what the stocks are telling you. And if enough of them are looking good and setting up, then that particular follow-through day has a lot more chance of being correct.
I agree, Dr. K. Well said. Yeah, so you know, all you have to do is watch the stocks. You don't have to really worry about the whole follow-through thing. You know, I think if it wasn't for the editorial page, I wouldn't even be subscribing to IBD. I only get it once a week. I only get the weekend edition, I think, now delivered, and then I get the e-version. But it's kind of like old news. By the time you get it, it's old news, and I've already seen all the stocks that are moving before they're moving, and I catch them on HGS Investor Software. So, you know, that I can just operate on that basis, and I don't really need some of these silly and old school IBD rules. So I like that, Gar. I can act like a mindless moron, says Gar. Gar, you actually have been officially licensed to act like a moron, so that works. So I just like to act like a moron myself, but no, I'm a mindful moron. How's that? Since listening to these webinars, it is a liberating feeling. Using you guys to learn and then apply it on your own. Ultimately, you have to trade for yourself. This is a hard concept, but once you get it, it is a different view. Yeah, and I think you also, you know, read about Livermore, read Wyckoff's stuff. And I would read everything I can get my hands on about those two guys, because there are a lot of basic truisms about the market and about the basic concept of supply and demand. Now, the dynamics of that can change, and so I think if you're operating on a purely mechanical basis, you're frequently asking for trouble because things will evolve and change, and you have to sort of adapt to what you're seeing in real time. And you guys can see that my methods of buying stocks and Dr. K's have varied somewhat. And the pocket pivot was the initial sort of contrarian weapon because nobody sees it. It's in the base, and that has worked pretty well. Now, things have gotten a little more subtle, and what I find you want to do is you can actually anticipate where you're going to see pocket pivots based on the voodoo action or the buy it when it's quiet, the BWIC type action that you see along a moving average like you see with Sedge as it pulls in. Because here you have the pocket pivots, right? And you can postulate or hypothesize or whatever that it's going to be it could be a big pot and have a big move back up, say, to the mid-30s up to the 40 level. And so you're hanging tight in here. That's what you're looking for. So you're buying more on that rather than, say, chasing strength on a pocket pivot like with Paycom here and say, now that it's pulled back, now this could be your opportunity. So we're using them more as flags and then looking to buy on voodoo type pullbacks, which is basically just an extreme volume pullback. And I think if you vary your methods and shun breakouts, I mean, I mostly sell. I want to have a big position in something by the time it's breaking out, or have been working a big position in something by the time it's breaking out. And then I would look to sell into that move rather than buy into it. And that's been a major change in the way I've operated. And it's why I'm going to say I'm up north of 20% this year. I actually was down 10 at one time, mainly because I was trying to get very aggressive on the short side early in the year. In January, if you guys recall, and I thought we were going to break down hard and took a little bit of a hit, which for me was normal, but I can just fight my way back, and that's what I've been able to do. But this has been a much more difficult year than last year when I was up 115%. But it still comes back to the same old way of operating in terms of these creative methods, which are rooted in what we already know about the market. So when I tell you to read up, and I'm sure everybody's read O'Neill's stuff, but a lot of that's just derived from Livermore and Wyckoff. And I would say what to me in my mind gives Livermore and Wyckoff more legitimacy is that they didn't build up a big marketing organization to pitch all their stuff or get rigid with producing publications and other products that are built around its particularly rigid system. So I think it's important to be well grounded in all of their philosophy and thinking about the market. And then, of course, develop some of your own thinking about the market. I mean, Wyckoff and Livermore developed their methods through observation. And I think that's what you're doing. Screen time is what I call it. And basically sitting in front of your screen, watching how things play out, studying your charts. And I go through a lot of charts all the time, as does Dr. K. And people ask me, I think we got an email a week or so ago, somebody asking what parameters do you look for when you're screening for stocks? And I use a very simple list. I mean, either an ERG rating, which is HGS Investor Software's version of a composite rating, over 170 or higher. I'll look at everything like that. Or a composite rating over 75 if you're using O'Neill tools. And all I'm doing is trying to get a nice pool of names, and it may be a couple 100, 300 names that I'm looking at, and sift through them and then use my judgment and my experience to pick out what looks like it might be playable. And in that way, you can come up with a lot of ideas that are not necessarily built around these sort of rigid screens, or the idea that there's some magic screen that's going to find all the great moves or stocks that are going to have great moves. I would have to say that some of the best moves I've ever played have been in names where I've thought outside the box. Like Mobileye earlier this year was a great mover for me. Cyber is another one. But all of these where we bought them and are thinking about them was a fair bit beyond just the standard by the book O'Neill type stuff. But I think it's very much Livermorian. Because what Jesse Livermore called a pivot point was really a pivotal point, and he frequently used it to describe a turning point or a bottom in a stock, not a buy point. So O'Neill kind of took that and bastardized it a little bit. So I think Livermore's concept of a pivotal point is where a stock is either turning direction, shifting direction, and beginning an uptrend or a strong trend one way or the other. Whether it's making a new high, whether it's turning off lows, doesn't really matter. I think that's more was Livermore's concept, and I've tried to build on that. Let's see. Somebody says, but I forgot to load up on the follow-through day. The good news is you didn't have to. You could have actually loaded up last Friday when I was giving you guys a bunch of names setting up to buy. And you'd probably be making Making some money here like I am, actually. Do you time your trades with shorter time frame charts? No, if something's just pulling into an area where I think it looks viable, I just buy it. I might use a 620 chart on the short side, but that's stuff I've talked about in other webinars, and I don't really feel like going into it right now. Which Wyckoff book is the one to start with? I would go with Stock Market Technique 1 and Stock Market Technique 2. I just finished reading another book called Trades About to Happen, and I have to say I didn't find it that useful. The guy goes through all these examples of this. This bar was up and it closed mid-range, and then the stock went down and volume picked up, and then the stock went up and volume didn't pick up, and blah 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 blah. And I just thought it's kind of overkill. And while some people think it's takes time to read through, I thought it was kind of simplistic in that manner. But the concepts were there, and I guess I didn't really find it that useful, although I think it could be read and it would help reinforce some of the Wyckoff methods. But I would start with that and then just, type in Wyckoff on Amazon and see what you come up with. Oh my God, that would actually require some initiative. Let's see. Somebody says that was a hard book to get through. I didn't think so, Gar. Interesting, but on the other hand, the way my brain works, I can look at a chart and then and if somebody goes through a long description, I can remember what I saw in the chart and what they're saying. I sort of have a photographic memory that way. I've found which is totally useless if it doesn't help you make a lot of money, as far as I'm concerned. But either way, okay. Any other brilliant questions? How about viable gap up with stops below? Do you believe in that for huge volume? I'm not sure what you mean, Sam. I mean, can you be a little more specific? I think any viable gap up is viable using the low, the gap up day as your stop. Otherwise, you may have to let it sit up again. And in this case, we might look at something like an Amazon. It had a viable gap up here, but it closed at the lows and it failed. But it's setting up again, so obviously use this as your stop. You're not going to get in any trouble here, although it may make you look like you're dumb for a little while before it finally does break down. But notice how it just comes right back up, 3 days down, 3 days up. That's what I call an udder pattern, where it's actually, if you took this out, it would be a nice tight flat base or flag, but you have this sort of drop out out of the bottom here, and it looks like an udder. So for those of you who like to get visually creative, so we got 2 hours to the Fed, a little more. RH, I noticed this one the other day. It looks okay on a roundabout. You had this pocket pivot, but you don't want to buy that. You want to look for the pullback. So you had a nice pullback on light volume, which could have given you an entry somewhere above 97.50 or thereabouts. That looks like it's trying to come out. I noticed that you're seeing, like in DHI, for example, had a pocket pivot yesterday, and some of the other builders are trying to come back, some better than others. There's Ryland, Meritage, Homes, not looking so hot, but I noticed that's coming back. There's another one too, DR Horton's coming back, and SPF, Standard Pacific, is that right? Or that's trying to come up. Yeah, but it's cheap stock. So I don't know. Some of these are coming back, and you're seeing Martin Marietta Materials come back, and Headwaters, and these might be considered building-oriented construction materials type things. So the whole group is doing a little bit better. PHM, thanks for that. Pulte Group. So they're hanging in there, but to me, I don't know if that's where the juice is. We'll find out as this market progresses. So Calm, Cal-Maine, eggs. I don't eat eggs anymore, unless they're fish eggs, actually. Well, I might have an egg once in a while, but it's come back, yeah. But it's on a viable position. What else? Anything else? Yeah, we're getting towards the end here. So market seems to just be hanging out right now, and I guess we'll see what really happens when the Fed comes out. But I'm just operating on the basis of what I'm seeing in my stock. So I had a big position in FIT. I loaded up some more this morning on the pullback down to 36 level, the 20-day, and sell it into this move. Now let's see what happens here. And so I'm just worrying about, I'm watching my stock and I'm trading it according to my plan, I'm not really worrying about what the indexes are doing or thinking about what the Fed's going to do, because I'm not waiting for the Fed. I got long a few days ago. In fact, you guys saw me get long in this webinar last Friday. Not this webinar, but the one we had last Friday. But I'll say this webinar format. And I was buying some Tesla, I was buying a few others on that day, and they all have moved higher. Tesla now, let's see, moving to the highs. The thing here is you got 27 million shares short in this thing again, and everybody was sure it's breaking down. But if you think about it, if you look at this as a pod and look at this breakdown, is that not good enough? If you short it, I think we put an alert out on this thing right here, right? Yeah, and you caught this move, and you get 60 points, 50 points in this thing in 3 days, 4 days, and you're not taking any of it. You're a moron. I love that word. So I think I said last week, it's tweeting Donald Trump telling me he should not use the word stupid. It's unprofessional. Moron, I think, is far more professional. So somebody says, love your out-of-the-box thinking on pods, Gil. Mind-blowing. Thank you. I never really thought of it as mind-blowing. I mean, it's just a little creativity, and I think that anybody is capable of this if you just, number one, believe that you can do it. I'm a big believer that the whole concept that we don't use our full potential, and they say, maybe Dr. K, you can chime in on this based on what you know about it, but they say that we use what, 18-20% of our potential, and I think a lot of that is because of our belief system. Go ahead.
Yeah, it's a very small percentage, actually. I think they said that Einstein used 10%, which is massive. I think, I guess it all depends on how you define, your percentage of your cerebral cortex that we're actually engaging at any one time. But I've always heard numbers around, the average person's like 5% or 6%.
Right.
So, if Einstein was double that, that's quite an achievement.
Yeah, so it's there, and I think a lot of it is we create mental blocks and we keep ourselves from believing that our brain is a lot more powerful than we want to give it credit for. And so what we develop, and I think society probably figures into this to some extent, we develop these crutches and beliefs that we need to see what somebody else is doing and somebody needs to show us what to do. We can teach you, but I think once you have some a foundation in theory, you go into practice, and that's where you start to really use your head. And I really do believe that everyone is capable of making a lot of money in the market, and I believe everybody is capable of figuring out. There's a few morons out there who I think probably have no business ever investing, and we run into a few of those once in a while. But I think anybody who's willing to put in the work, but most of all, you have to believe that you can do it. And a lot of what I do, I meditate, and a lot of it is visualizing what I'm going to do as a trader. And actually, what I'll do is I'll get it, the typical meditation thing, and I just visualize my account value rising, and I'm buying stocks and they're going higher. And I visualize this, and you feel the excitement of that, and you allow yourself to internalize that. And I think that is what will also help. So I think it's at least 50% a mind game to some extent. So I would encourage everybody to remain optimistic and believe in yourself, because like the old cliche says, if you don't, nobody's going to do it for you. So except maybe your mother, and that doesn't help.
Yeah.
Somebody
the
said,
psychological battles, as we all know, the market, the psychology that goes on in a trader's mind is key.
Yeah.
And very seasoned traders will say that learning the technique wasn't such a long road, but learning to master their psychology when they have money on the line.
Yeah.
A lifelong challenge for some people. And I know Ed Seykota sometimes would tell people that they don't have the. Well, he could be pretty harsh, and he would just say, look, unless you're going to get by these emotional roadblocks, unless you're willing to do the work to get rid of these blocks, emotional blocks, you shouldn't trade. You shouldn't touch the markets, because you will lose money over time.
Yeah, someone makes a good comment. I agree about the potential, and know I need to break my mental blocks and be positive that I can be successful at this, getting better, but for the past month have been in a rut. And I would say that happens. And the other thing is to accept that you're in a rut. and that you may need a little time to work your way out of it, but not to be discouraged by it, and also look for something that breaks you out of your rut one way or another. So anyways, so we're just hanging out here. The market's
Yeah, you
hanging
can learn
out.
from all these challenges. You can learn from all these challenges. I mean,
Yeah.
every time the market does something different or very screwy that causes you to have a drawdown, see it as a challenge, because every problem contains its own solution. I mean, the pocket pivot concept that I created in 2005 was born from 2004, which is a far more compressed market than I'd been experienced with, because we didn't get those kind of markets in the 80s or the 90s. And so 2004, as tough as it was for me, was a great teacher and helped me come up with some concepts that I use to this day. So don't let things get you down. I mean, if you feel like you're really stuck in a rut, well, embrace the feelings. Don't run from the feelings. Embrace how you feel, but process them and move past them. And keep a diary, trading journal, or something, so that you can clock your your emotional state of mind when you're going through this, so that you can learn something from it. Seikoda is known for creating masterful traders over his career, and you could check out his website if you want. He talks about this sort of thing and how to overcome these blocks at tradingtribe.com. And I go there every so often just to read on users and what their experiences have been. It's a nice little diversion, because sometimes there are new morsels or tidbits in there about trading psychology that I can apply to my own trading.
Here you go. Here's the website here, the Trading Tribe. You can go here. Here's Richard Wyckoff. That's who we're talking about. Somebody's asking if it's Wickham. No, it's Richard Wyckoff. So W-Y-C-K-O-F-F. There it is. And look him up. And of course, everybody knows who Jesse Livermore is, so I hope you do. And I think that's all we have. Any other questions? Somebody says Sedge pulling into MAs now. Yeah, it's pulling back. So it tends to be a little bit thin. So I'm just watching it here, and let's see if it becomes very viable right here. You're right at the MAs, so we'll see. I don't know. It could pull down a little further. It probably depends on what the market does. But I've been buying bits and pieces as it pulls in here. But FIT was really the hot ticket over the last few days. Now I only wish I'd gotten into SHOP, I'd say, if I have to invest on the basis of hindsight, I guess. But that's a nice move. But we were looking at this yesterday. Sedge lockup expires 9/22. Guard, where have you been? Didn't you listen to what I said earlier? Remember Cyber? Cyber had a lockup expire on March 23rd, which was right here. And what did the stock do after that? It went higher. So I wouldn't get caught up on that. I would just watch the price volume action of the stock, because what happens if a bunch of people start shorting it, thinking that, oh, the lockup's coming out and expiring, and I'm going to short it, it's all going to break that. You get a confluence of short sellers. Nobody sells, and the thing turns back to the upside. It's possible it may just hang around until then, and then once everybody realizes nobody's really selling it, then maybe it takes off to the upside. I don't know, and then it could just fail altogether. It doesn't have to work. So you take your position, you set your stop, and I wouldn't really worry too much about whether the lockup is going to have any effect, because you really don't know. Again, you're playing what if rather than what is, and I prefer to invest on the basis of what is. I can't figure out what ifs, and I think what ifs are for people who are idiots. So, oh, I'm sorry, morons, idiots, unprofessional. Anyways, you do not get, okay, well, you can look at the video later on. We can get that posted hopefully in the next hour. Anyways, you guys, that's that. I don't have anything else to offer, and we'll see what happens. It should be an interesting day, at least the last couple of hours of trading. So good luck, and we will catch you next week. So have a great weekend, everyone.
So long, everyone.